Welcome to this IG investment interview with AIM-listed Egdon Resources. Egdon is a UK-based oil exploration and production company primarily focused on onshore UK. It's just announced a 160% increase in net production for its full year. Its managing director is Mark Abbott, and he joins us now. Mark, welcome. Well, as a founder of the company, you've been around long enough to know the assets very well, haven't you? What, late 90s, I think you started the business.
The company was formed in 97.
And you still own 3% of the business, so that's nice to know from an investment point of view. Before we get into the numbers out today, which have been an interesting read this morning, positively, let me just quickly invite you to talk about the assets and what this uplift in oil and gas prices has meant for this last year.
Well, obviously it means that any oil and gas we produce is a lot more profitable. The beauty of where we're dominantly operating onshore is that we are profitable down to relatively low oil and gas prices, but clearly at around $100 a barrel for the year, we're seeing very good profitability, and investment in new projects is a lot more attractive.
I said you've announced 160% increase in net production. That's got nothing to do with the price, of course. That means your overall production is lifted by that percentage margin. Look, we're talking relatively small numbers, as people will know. It's a relatively small company, but that's a tremendous increase in overall production. What's generated that?
Well, that's dominantly the Wrestle field. So right. Wrestle has been a really big success for the company. It's outperformed our expectations. Our initial expectations were perhaps 500 barrels a day. We've significantly exceeded that. Average was about 650 for the period, and that's constrained by the permit limitations in terms of incinerating gas. So we think Wrestle has a lot more to give. Wrestle has monetization of that gas, money to be derived from using that gas, and also from another reservoir there, the Penistone Flags, which is a significant resource, 1.5 million barrels, 2 billion cubic feet of gas, and we're looking to develop that in the coming year.
I cut you up, didn't I, last time, because you didn't get an opportunity to talk about the rest of your assets, because you do have other assets other than Wrestle, although that is obviously one of the flagship producers.
Yeah, well, although that's been the highlight of the year, we've also got the Ceres gas field, a small interest, 10% in an offshore gas field. That's undergoing a really positive late life renaissance because of the gas price, generating significant revenues for us through the last year, and we're now looking to extend production there out to 2024 and beyond. Keddington, small onshore producing field, where we generating revenues there and see significant upside with a sidetrack there to access about another 180,000 barrels. We're looking to redevelop fields at Waddock Cross, Avington, operated by iGas in the Weald Basin, and potentially at Kirkleatham up near Middlesbrough. So a lot of opportunities at these sort of prices to really generate some significant revenue.
That's the key point here, isn't it? These prices, it does bring on otherwise uneconomic fields, doesn't it? So there's an opportunity here to drill and to take out hydrocarbons, which otherwise wouldn't be available.
To some extent, I would agree with that. Although onshore is very, very economic, down to levels in the teens and mid-20s. So I think what it does for us is it generates the capital, the revenues, and the cash flow for us to reinvest in those additional projects.
So you're a company which produces profits. The government's got its eye on you. I want to talk about the hydraulic fracturing part of the business in just a minute, but generally speaking, they're looking at raising taxes, and they're looking at oil and gas producers for those that have benefited from this rise. Is that going to come down to your size of company?
Yes. So we have already made our first payment under the Energy Profits Levy, the windfall tax, for the period from May to the end of July. A little bit ironic when you see that companies like Shell haven't paid any windfall tax for that year. But yes, it will impact us, and that's built into our forward cash projections. We have a large amount of tax losses that we can offset against the supplementary tax and the conventional tax. But the EPL, the windfall tax, doesn't have that ability. And I suppose one of the problems we have for this year is that we can't react quickly in terms of upping our activity level, because there is quite a positive investment allowance in there, which will impact us and we'll benefit from next year and the year after with the programme of works that we're planning.
Well, let's ask a little bit more about that, because the amount of money coming in off the production that you're delivering gives you that extra fat, if you like, in the opportunity on the balance sheet to invest. What is your pipeline of investment looking like? How different is the company going to be in a year or two's time?
Well, we hope we'll be building on the very, very positive results that we've announced today in terms of profitability. and we'd look to see production significantly increase by that time. We've got Wrestle, which will still be one of our key focuses. So we're looking to utilise the gas for electricity generation there and export into a local grid to generate a new revenue stream, and to also allow us to lift the production level there. We're looking to invest in the Penistone Flags development there, which will add another revenue stream, some more production and revenue. At Keddington, as I mentioned earlier, we're looking to drill a sidetrack well there. At Waddock Cross, we're developing plans to rejuvenate that field, and potentially, I suppose, in terms of exploration, at Biscathorpe and North Kelsey, but they are dependent upon the outcomes of some planning appeals that are currently going through the process.
How is the Biscathorpe appeal going, and what stage is it at the moment? Because that goes back, I think, to April this year, wasn't it, when you made the appeal?
Yeah, so we submitted our statement of case in April of this year. We held a planning hearing on the 11th of October, and the decision is now in the hands of the planning inspector. So we would hope to hear that decision this side of Christmas. On North Kelsey, which is the other exploration well we're looking, we've submitted our planning documentation, and we're just waiting on the timetable and process for that at this time. But hopefully early next year we should get a decision there as well.
All that we've spoken about, I think, is, correct me if I'm wrong, it's all conventional oil fields, isn't it?
Absolutely.
Yeah. So you do have some fracking opportunities there, given the opportunity. I want to talk a little bit about this if I can, because when we looked at engaging with interviews around the fracturing business, there was Liz Truss in power, and she's looking like she was going to deliver a positive outcome. Let's take a look at the share price chart, because I wanted to focus in on this. This takes us all the way back to 2015, but if we can look at this spike that we've got here, which was an interesting spike coming through on the 9th of September this year. Let's call it the Liz Truss effect, for want of a better word, because it was Liz Truss's government that indicated at that time that they were going to allow hydraulic fracturing. And of course, this was a great boon, not just for Egdon, but for other companies involved in this opportunity. Since then, as we now know, the subsequent government, led by Rishi Sunak, has said no. What was your feeling? What's gone through the thought process when looking at this? What sort of assets have you got that might have taken advantage of that spike?
So let's take the second part of that question first, while I compose myself for the first. So in terms of our assets, I think we have a very strong position in shale gas in the UK, and specifically in the Gainsborough Trough, an area of the East Midlands, where we drilled a well with iGas as operator at Springs Road, which proves a world-class resource. So from my perspective, there's the opportunity there for a very significant amount of gas to be produced locally and to help in terms of the energy security, jobs, tax revenues, balance of payments. You know, there's a really compelling argument that if you can do it safely and environmentally sustainably, then we should be producing our own gas rather than importing LNG, which has a higher environmental footprint pre-combustion than locally derived gas. So I think there's a compelling case there, which we'll continue to make, that this can be done and should be done in the public and national interest. Now, getting back to the somewhat shambolic period of time that you refer to in terms of that peak in our share price, throughout the summer we saw both Liz Truss and Rishi Sunak, when asked the question, you know, are you in favour of fracking, saying yes, subject to local consent. Clearly, when Liz Truss became Prime Minister, with Jacob Rees-Mogg as Secretary of State for Bays, they lifted the moratorium and actually, I think, prioritised shale gas as part of their energy independence strategy. There was a very shambolic debate, which probably led ultimately to the downfall of the Truss regime, ultimately, I think. And then when Rishi Sunak became Prime Minister, very unexpectedly, given his previous position, he referred back and reverted back to the 2019 Conservative manifesto position and reimposed the moratorium. I think the argument is that it's around seismicity, but I think what we see is it's more a political issue than a safety issue in reality.
Seismicity, what a great word. I've never heard that before, but I understand what it means. It's all about this possibility that people claim that it disturbs the land and you end up with some sort of tremors on top, presumably. And there's a difficulty in getting that argument across to people who happen to be living over a fracking site.
No, absolutely. So, I mean, seismicity is ground movement. You will generate seismicity, you're breaking the rock, and there will be an impact from that. But let's get this in context. So the surface vibration is what really matters. That's what causes any issues with properties, etc. And the level of that led to the moratorium being imposed was very, very small. I think that been described as the same as dropping a watermelon from sort of waist height in the kitchen. The difficult thing for our industry to come to terms with is that there's a real disparity in regulation between shale gas and other industries. So if the same levels of ground vibration were imposed on the construction industry, the quarrying industry, the mining industry, geothermal, those industries will be closed down tomorrow. There's a British standard which applies to those in terms of what's called peak particle velocity, the way that the ground moves, which shale gas could definitely stay within. And so I think that argument about seismicity is one of the key ones that needs to be made going forward.
Look, we've got to begin to sort of round this off, and let's talk a little bit more about the future. Setting aside those assets that under the current political regime are not going to be utilised. You seem fairly confident and fairly positive about the outlook and amount of money coming into the company, of course, and what's happening here, despite the fact you had to pay some in extra tax. Just briefly tell us what's in the next year. I mean, you've referred to it briefly, but what do you see as the highlights?
Well, I think we can look forward to a pretty active couple of years, 2023 and 2024. We're looking there to, as I mentioned previously, to develop the Penistone flags at Wrestle and utilise the gas, to drilling further development wells, production wells at Keddington, potentially at Kirkleatham, to rejuvenate the Avington field, and potentially to bring back on stream the Waddock Cross field. All of those will lead to further production and cash flow. And then exploration-wise, depending on the outcome of those planning appeals, we're looking to drill at both North Kelsey and Biscathorpe. And as a company, we're also looking at developing some energy transition projects, so looking at renewable projects, utilising our existing fields and assets to bring forward some of those projects for value creation for our shareholders going forward. And I suppose the key thing is when you look at the revenue generation for the last 12 months, already in the first quarter of the current year, we've seen 2 million of revenue generation over those 3 months. So we're looking at continued positive cash flow to be able to make these investments. Okay, so one final question has to be then, let's refer back to the share price chart and ask you what's built into that, bearing in mind what you're saying. Markets like to price in the future, and at 3.25 pence, which is roughly the sort of area where we are, what's built into the share price at these levels? Well, I think what's built into the share price at these levels is clearly not all of those potential developments. The underlying asset value of Wrestle and our existing production. But we would see quite a lot of upside from where we are today in terms of the programme of works that we're planning over the next 12 to 18 months.
Well, we look forward to hearing more what happens. But Mark, in the meantime, thanks so much indeed for joining us. That's Mark Abbott. He's Managing Director of Egdon Resources. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.